What's good, everyone? How you doing? I hope I find you all well. So, you all know me now. I'm Kanam, your mentor. I'll be taking you through today's lesson. So, today's lesson, for everyone who will be under today's lesson, as you can see with my screen, I know you can see my screen well. I know you can also hear me loud and clear. For I sort of kind of fixed my mic, so I'm now sure that everyone can hear me. And I apologize for the background sounds. I'm going to do something about that as well. So, without wasting time, let's get into it. As you can see with what's written on the screen right now, I hope for everyone who's holding a pen, everyone who's watching this video, who wants to learn, and who's watching this video for learning purposes, you should be holding a pen and a pen and a book, not a paper, please. For this is crucial and important information here, and it should be handled well and taken note of well. So, as you can see with the heading there, things to take notes on. Please take note of this if you didn't know about this, or if you didn't take note, if you didn't have this written down. Take notes of it, take a screenshot, whatever you can do, please do so. We are wasting time. If you're watching this video on YouTube, please kindly hit the subscribe buttons, because we have plenty of these amazing videos like this, and we are making people learn. When people are learning, and they're learning here on this YouTube channel for free. And if you're one of my students, we are getting deep in the phase one of our course. This is the free stuff that we give away, for we will get into the advanced stuff, and that's the part that we do not give out to the public. That's for our students. So if you like what we give out for free here on YouTube, make sure you do some follow-ups on the mentorship, then come get mentorship with us, then you're home and dry. So let's get into the video. Please take note of this. So what's written here, these are EMAs. We all know EMAs with this strategy. EMAs are common in this strategy. On the H1 time frame, these are EMAs, how they appear on the H1 time frame, and how the same EMA will be appearing on the H1 time frame, and how it will be appearing on the M15. So what am I saying? The 13 EMA on the 1 hour time frame. The 13 EMA on the 1 hour time frame. Yeah, sorry. The 13 EMA on the 1 hour time frame, right here, is represented on the 50-minute time frame by the 50 EMA right there. Same thing. Let's go. It goes so and on, it goes on and on. The 50 EMA on the H1 time frame, represented by the 200 EMA. So when the 13 and the 50 cross on the H1 time frame, on the 15-minute time frame, the 50 and the 200 cross. Please get that right. If the 13 EMA on the 1 hour time frame gives a crossover with the 50 EMA on the 1 hour time frame, on the 15-minute time frame, the 50 and the 200 EMAs give a crossover. So this same crossover on the H1 time frame is the same crossover on the M15 time frame. So same thing for the 200, 800. No representation for the 800 EMA. So you can go on your charts. This is some really simple stuff. Go on your charts. You can confirm this. You can confirm this by yourself. Let's get on to the next slide. Oh, come on. I lost it. Okay, let me get it back. Okay, it's back now. So this is the things to note 2.0. Take note again on this. So the 13 EMA This is the catch-up. It's called the catch-up. These are simply nicknames for the EMAs that I'll be calling the EMAs as we proceed into today's lesson. So you need to take note of this and keep this in the back of your mind. And this is for more understanding for those who will be joining our mentorship, and for those who are already under with our mentorship, and for those who are just looking to understand this strategy. You need to know this these nicknames that we give to the EMAs. The 13 EMA is called the ketchup, the 50 is the water, the 200 is the mayo, the 800 is the blueberry. All this is because of the color that they have. So the 13, you see it has some reddish color that looks like ketchup. The 50 EMA has some bluish color that looks like water. The 200 is some whitish color that looks like mayo. The 800 is some deep blue. It is some deep blue. It is some deep blue EMA. It is some deep blue EMA, known as the blueberry. So let's get on with it. Let's continue. Okay. Okay, we're back again. I'm back. So let's continue. Now let's get into the lesson. I'm sure now you get what I mean, and you get what we'll be talking about. With this PDF that I prepared for you guys, right? Yeah. Well, this one is on the EMA bounces on the ID50. Let me open this one right. Okay, right. Yeah. Okay. Welcome to today's lesson again. As you can see, this is presented by your mentor from Defeat the Market Maker, DTMM. So when you get this PDF, kindly click the link here to join our Telegram group. It's simple stuff. Defeat, that's our logo. So today's lesson, it is called the M and W of the Mayo. Oh, and that's the 200 EMA setup. So this is the setup. So today we'll be learning of another setup, the second setup after the ID50 that I did a video on a week ago. So this particular one is of identifying an M and W of the 200 EMA, the Mayo, and making it and having it as a trade setup. So after you get to understand this setup and you know this setup, you are able to take this setup and profit from it. So you are now, after you know about this setup, you back test it for a while, a week or so, then you are able to notice it and you understand it. I tell you, you can only wait for these setups to present and only trade this setup. Trust me. If you want more setups, there's the ID50. There are more that are still coming, and there are even way more that we have did that are here on the channel. You can easily go through the playlist and all this. But by only knowing this, after this video is finished, after you watch this video to the end, you'll be able to just trade this setup only because it presents each and every time on all currency pairs. Trust me, on all currency pairs. I don't know about those volatilities and all those indices. I don't trade that. I only stick to currency pairs only. So I'm sure you can only profit from this setup alone. But then we have many more for those who would want variety. So let's get on. What is the M&W of the Mayo? Someone may be asking. So this M&W of the Mayo, this is when the market makers are creating a reversal pattern of the 200 EMA on the 15-minute time frame. Please take note that this M&W of the Mayo occurs on the 15-minute time frame. Then on the 1-hour chart, the market makers will be bouncing off the 50 EMA after the stop hunt. Get me right. After the stop hunt has occurred or has been formed or has been presented by the market makers for us on the 1-hour time frame, we'll notice a 50 EMA bounce. That's when we know that on the 15-minute time frame, a 200 EMA bounce has occurred. From the relationship that I've told you earlier to take note of. So this can happen in any of the three levels, but mainly one should be looking for the setups in level 2. But then if you're in level 3, you would be trading back into the first leg. So apparently in the level 3, we can trade both directions. We can trade both directions, guys. In the level 3, we can trade both directions. Even level 2, sometimes we can trade both directions. It is only in level 1 that we cannot trade both directions. We cannot trade towards the peak, but we can trade more against the peak. We can only trade against the peak, actually, not more, but actually we can only trade against the peak only. So if you have a multi-day anchor or multi-day structure, it is not advised to trade back into the first leg. I will show you this in the examples below, but then sometimes you could do that with experience, with enough backtesting and enough of training your eyes to notice these patterns. You could trade back into the first leg. It wouldn't be a problem. So let's get on it. Let's get more into it. So the same entry rules apply for our standard M&W reversal patterns. So that's the same rules that apply here on this M&W of the 200 EMA. So what are these rules? As you all know them now, the second leg close below the 13 EMA. An apex, please, I didn't include this one, but an apex should be present as well for us to see that a second leg closes has occurred. The TDI confirmation, the RSI should be crossing the signal line below below or above the market baseline. So again, you could click this. I'll show you how it works at the end of the video. So now let me fix my zooming here. Let's get into the examples now. So as you can see with the charts here, the screens are split. This is UJ, that's UJ. The screens are split right there. That's H1 and M15 split. So the boxed area right there. The boxed area right here. Right here. This is the peak, the anchor, the level 3 peak formation high. For this currency pair, for this particular currency pair. So what are we looking for? We're looking for on the H1 time frame, as we said in the above section. What are we looking for on the H1 time frame? We're looking for a 50-minute bounce. We are looking for a 50 EMA bounce on the H1 time frame after the soul point is presented, and then on the M15, we're looking for the M bounce. We're looking for the bounce off of the 200 EMA, MOW bounce off of the 200 EMA on the M15. On the H1, we're looking for a MOW bounce off of the 50 EMA. So this is on the H1 time frame in the M15. So let's dive deep into the zoomed M15 chart. So what are the criteria for this pattern? This should always okay. You should notice this first. This 50 and the 200 cross should be noticed, should be noticeable, should be clear, should be present. Then after that, that's when we are now looking for our bounce, our M or W bounce of the 200. So what happens after that? Price spikes and gives a pin to the 200, then rushed down and closed way below the 800. We will not take this trade. Why? Because it is in one leg, and we are looking for an M or W of the pattern of the 200 EMA. So what does price do? It forms an apex right there. Which one is the apex? Let me clear this one here. So it gives some sort of first leg, yeah, there, then it gives an apex there. Then why am I calling this an apex? It closes below the 13 EMA and it went back again to close above the 13 EMA. Then what does it do? It went on to give this here, sorry, this sort of like a second leg, yeah, but it didn't touch to it didn't bounce off the 200, so that's why we wouldn't take that trade. So and then it came back again to the 200, and what does it do now? It forms this beautiful evening star right there, and immediately after it gives that, it gives a 200 an evening star off of the of the 200 EME, giving a perfect M right there. Let me make it clear for you right there. Sorry, right there, right there, and the entry would be right there indicated there. Why? So after the market gave us this beautiful evening star, what did it give us again? A beautiful shifting candle. As you all should know by now, shifting candles are really important and crucial with this strategy of ours. So one would enter here, one's entry would be there, and price would have gotten all the way to this downside here, and give someone would, myself, I would have exited here with 30 pips there, 30 pips, 30 pips in my pocket. So the H150 bounce is equal to the M of the male on the M15, as indicated earlier. So this is EU right here. As you can see, this is EU. The split chart is the H1 and the M15 of the EU. As you can see, same things. Peak right here, the peak right here, the anchor. Let's get down into it. The 15-minute time frame, same things. The 200 and the 50 cross, this should cross. Then now what happens? What then do we expect now? The consolidation, the Asian range, whatnot. Stop onto the high, then bounce. It touches the 200 EMA. It gives us a bounce. Our timing is correct. Our bounce is correct. The M is right there, as you can see there. As you can see here, the M is correct. Close below the 13. Then one would not take this trade right after the close below the 13 and the 50. Why? Because the market didn't present a shifting candle. One would be waiting for the close below the 200 EMA, so the entry would be most perfect. So yeah, around that area, around this area right here, and the market then pushes all this way down 100 pips. 100 pips in a trader's pocket, in our pockets. So apparently we're the traders who make money, guys. With this strategy, you will make money. Don't come asking, don't say much. Don't come asking much to me. Just learn the strategy as the way that I'm teaching you. After the 200, yeah, the 200 and the 8, after the 50 and the 200 crossed right there. We're now waiting for the bounce to okay. After the bounce occurs, with the right timing and the stop ones and the right, and the EMAs get cleared, we enter. We make money, making money like snow. And the TDI confirmation is correct and it's locked in. The RSI crosses below the market baseline in the signal line, and that simply means one is cleared and allowed to enter the trade. Trading back to the first leg in a multi-day structure, as I had told you earlier that we'll talk about this one now. So this particular trade is a trade where we will be trading back into this multi-day structure, multi-day anchor. So same things, these are just same principles, everything just the same. So the H1 time frame we're waiting for, so on the H1 time frame, what do we see first? We first see the 13 and the 50 cross firstly. Then what do we now wait for? We now wait for a 50 bounce and an M or W off of the 50 EMA. Then after that presents, we wait for our candles or our EMAs to get cleared and our confirmations, our TDI confirmation, then we strike our trade. We make money after that. If you think that I'm lying, open your charts right now and back test this thing. I'll show you right after. I want to open the live charts and show you entries that could have been made using this strategy, money that could have been made using this strategies. And some of the money I would have made it if I caught the moves. If I was looking for moves during those times. So on the M15, same things. We're looking for the 15 to 200 cross. Then what after that, we're now waiting for our London session or New York. Our timing, we don't trade the Asian session. Then after that, we're waiting for the bounce and close bounce of the 200. Then after the bounce, we're now waiting for the EMAs to get cleared, shifting candle, strike our trade. 30 pips, I'm out. Those who decide to cash in more, 40 pips, they're also out. But then it is not encouraged because this is because of the outside structure right here. Because of the multi-day structure right here. Right here. So it's not encouraged to expect to be getting out all the way down here or even way down below the low of the anchor. It's not wise and it's not sensible for the strategy. We don't allow that. The strategy doesn't allow that. You just get out immediately as the pips are reasonable enough because of the structure. So an M and W, an M of the male leads into an ID50. So apparently, there are situations and there are times, as you all know, the markets are just busy and noisy. The markets do what they want. The market makers' job is to make money as well. We are getting into the market to make money, but the market makers who own the markets, they want to profit from the they want to profit from the moves that they will be making on the traders and inducing traders and trapping them and faking out traders so that they get faked out and they take trades that goes in the opposite directions and hence leading them to lose money. So sometimes you might notice we always have backup plans on with our strategy. So how do we do that? So as you can see here on the H1 time frame, bounce of the 200 and close about the 50 right there. Bounce of let me indicate this out bit. Here, the bounce right here, then close right here. So sort of like a 50 bounce here. Then the cross is right here. Then 50 bounce right here. So price bounce of the 200, then bounce close here right there, then went on to close, went on to bounce off the 50 there. Same thing there, spiked, pins to the 800, then bounced off of the 200 right there. Then it went on to bounce off the 200, giving a perfect W of the 200. So on the M15 time frame now, what are we looking for? What are we looking to see? We're looking to see what is already on the screen. The 15, the 200 cross as usual, or bounce off of the 200. So price breaks here and then spikes the 800, then came back to close above the the 200 and the 50, then it bounced off of the it bounced off of the 200 with a railroad candles. Then our entry will be right there, right here. I mean, our entry will be right here. Then 45 pips, we out. Yeah. Then price went on and gave a W. Yeah, W there, and it just went up, continued up. So our entry would have been here on this week, then 30 pips right there. So yeah, the TDI confirmation right there, the TDI confirmation on this one right here. So sometimes I'm saying sometimes only one leg touches something sort of like a V. Those who know, those who always follow and watch these videos know what I mean by a V. A V is also a substitute of a W, where sometimes you may see a W, sometimes you may see a V. It varies. It do vary. It vary. So let's get on with it. So we have H1 time frame or split. Then on the M15 we have our crosses right here, right here. We got cross right there. Our bounces right here, right there. The 200, the 50 cross right there, the entry. So I know that we do not trade. So I mark this trade right here is marked. Why? This trade is not for it's not for beginners. It's not for amateurs. It's for experienced. It's only for those who are experienced in this strategy. It's only those who are able to. It's only those who are allowed to take this trade. This trade that goes against the our rules, some of our rules that we shouldn't be trading the Asian. So guys, with enough experience and with enough knowledge on this strategy, that's why I encourage you guys to learn first, seek knowledge first. But it's fine. Sometimes you might not have the money for mentorship. That's why I decided to make videos like this and and put them out here for free for you guys here on YouTube, so that you could see and benefit and gain and able to make money, so that you could fund yourself and finance your trading career. So the entry will be right there. Then number of pips right there, 50 pips, and then you're out. This one's on EA. Let's get on with it. For this one, multi M or W of the male. Let's get it. H1 time frame, same things. 1350 cross, 50 bounce, 50 bounce. So on this trade, let's get onto the zoomed one here. We get our 50 to 200 cross. That's the first thing. That's the first principle. So if you're taking notes, the first thing that you note and that you should write down is that the 50 and the 200 should cross. After a cross, that's when you start waiting and expecting and looking for a 200 EMA bounce, and that bounce, and after you see that bounce, you wait for the call. You wait for the confirmations. The confirmations, the candlestick patterns, shifting candles, the TDI confirmations. That's the third one. Then you strike That's the fourth one. Then you make money. That's the fifth one. You collect your pips. That's the fifth one. It's your right as a DTMM strategy trader to take and make pips from this market. Those who know what I mean know what I mean. Those who know. So the other trade will be right here. So what happened on this trade? Let me indicate you. This one is a beautiful one. So what does price do? So price accumulates in the Asian, blah 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 blah. Then it breaks down. Then it break the Asian low right here. Then it continues. Then it gives a sort of like a bounce pin of the 200 at first. Then it didn't break the 13. Then it shoots back down again. Where to spike the 800 right here and giving sort of like something like a star right there. Then after it gives a star, it then came back to the upside and then it closes above the 800, the 200 and the 213. Then it didn't stop there. It went on to give an apex, to form an apex right here, sort of like so meaning that this was the first leg in outside structure, and then it came back to bounce off the 200 right here with some pins, some beautiful pins right there. So the entry will be right after the shifting candle that closes above the 13 and the 50 EMA. That's when the entry will be made, and 80 pips straight up. Boof. TDI confirmation, everything is aligning, everything is perfect. This is really simple. I mean it. This is really simple. If you think I'm lying or if you don't believe me, open your charts. Open your charts. No one's charts. Don't ask for my charts. Open your own charts, your own broker's charts, or your own trading platform, your own with these EMAs, and try what I'm saying. If it's lying, hit my inbox. My description is right there in the sorry, my Telegram ID, my contact is right there in the description box. Get in touch with me and tell me that this strategy lost you your money, and I'll be willing to give that money back to you if you provide me the right evidence that these structures and these things that I'm showing to you made you to lose your money. I need that evidence. Show me that. Show me the entries and the setups that I'm teaching right now, losing you money. Then I'll be happy. I'll be happy to fund your accounts again. If you encountered such a moment where this strategy would make you lose money, this setup actually would make you lose money because of how much confidence I have in myself and I have with this strategy and I have in this setup and I have in God, of course. So yeah, this is it about this setup right here. So the PDF will be available in the DTMM, and I'll find a way that I will link. I'll pin this in the description box. Everything is in the description box for those who want my mentorship, who want to sign up for the signals. Get in touch with me. My ID is right there in the description box. Who wants to join the community, it's right there in the description box. For funding, if you want a trusted prop firm that I myself use, it's there in the description box. What else? What is the trusted broker that I use as well? It's right there in the description box. I use this broker for my funded account and for my personal money account, for my own funds account, own funds money account. It's right there. So kindly hit the subscribe button, press the like button so that you may get more videos like this. Not only my videos, but other videos that could help you improve your trading and improve your journey, your trading lifestyle, and make you money, that could make you money. So without me, before I close this video, I want to show you the live charts right here and show you what I've been teaching during the lifetime. So this is on the M15. right here. I didn't need many minutes. As you can see, the 13 and the 15, the 200 cross right there. What then happens here? Bounce off of the bounce off of the 200 shifting candle or entry would be right there. Let's check for our TDI confirmation after the shifting candle. Boom, we can see that the RSI would have crossed above the would have crossed above the come on would have crossed above the what's this code again, the market baseline and the and the signal line. Sorry. So yeah, that's how we make money. That's how money is made in these markets, in the forex markets, with really simple patterns that are back tested and that one should always take note and practice. As you all know that you can practice, it is only after you practice that you make your trading strategy perfect and your journey becomes perfect and smooth. It becomes so smooth if you practice these things and if you learn knowledge, the right knowledge, not only from me, but then from someone who has the enough experience and who knows what they're doing and who are really willing to help you. So guys, stay safe, mask up, and have a good one wherever you are. So this is me, your DTMM mentor, signing out.